This is the team.
All right, ladies and gentlemen, welcome back. It is Monday, March 11th. We got another chart talk coming at you. Market's starting to slow down for the first time in about 3-4 months right now. We'll get into that and all the details about market outlook in a bit. But first, gotta shout out my boys hooking me up. Beautiful poster of me and my puppy Nugget. Nugget's going through some health problems right now. There she is in the background. She's getting out of here. She's not a fan of the camera and the lights camera action. But big shouts out to you guys. Looks great. I'm gonna put it on my wall right there. We'll see it all the time in Chart Talk. So big thanks for that. It means a lot. And again, every couple of years I get the shout out and to get to talk about something we never really intended on when we started this business was the amazing community aspect that we have. How most of our members at this point have been with us for 5 years or longer. We have this great, really tight knit community, and it's just it's really great when you go through tough times and you have people that have your back and looking out for you and make you feel better and all that. So big shouts out to my guys. Really appreciate that one. Without further ado, though, let's hop into some market outlook, some chart talk. I'll share my screen right here and let's get into it. Okay, so we got the S&P up here, S&P 500 up here. We're clearly still in this channel, this uptrend. We're just starting to see telltale signs of the market slowing down a bit. We had a big reversal Friday. As we took out new highs, had a big reversal to the downside. And throughout last week, I think it's more prominent than in any of the weeks prior to this year, really dating back to October. It was failed breakout after failed breakout, just kind of long setups not working the same. We've seen it things slow down in the past couple weeks. What does that tell us? It simply tells us to put our foot off, take our foot off the gas a little bit, let the market tell us what's next. I think over the years in trading, if you're looking at setups every day, you're going through your watch list and everything. Over time, you kind of develop a sixth sense as to when you want to push it and when you want to, peel back on the risk. And something that when we started our career way back in the day at the prop firm 10, 11 years ago, every day we were just kind of trading the same. There was no real market outlook. There was like, all right, let's just find setups. Okay, I think the market's going down. Let's find a million short setups. The market's going up. Let's find a million long setups. Now it's as you're much more developed into the game, where you're making your money, the type of setups and the action you personally need to make your money. There's times to really push it and there's times to, reel it in. And we got those signs last week. We began to reel it in pretty much all last week. After Tuesday, I had a rough day, my first, rough day in a while of just huge reversal on the P&L, up big to down big. Wednesday and Thursday, kind of the same type of action, up, down. And I was mostly breakout trading. And the way I trade is, when breakouts are working, I'm going to push the breakouts, over and over again until I see them stop working. And that's kind of what we got last week. So, while we're still in this uptrend, it's just looking a bit hairy for now. We got a big reversal on NVIDIA. Is that the top? I don't think it's the top. I think it just cools off for a little bit. It's kind of given the similar SMCI vibes that it gave 3 Fridays ago. The stock's still 40% higher. So it's not like, it was a huge reversal that, was a huge change of composure for the stock. It just kind of wasn't in that constant breakout phase and got a bit choppier. This is kind of the same thing we saw in NVIDIA. And here's the SMH, the semiconductor ETF. And it had its largest volume day Friday on that reversal. And obviously semiconductors have been leading this market higher. Largest volume day on that reversal since the October bottom. So just very interesting that it was literally the largest volume day on a downside reversal. The last time it had it was on an upside reversal that began a major trend. I'm not in the business of calling tops. I'm not, over predicting any of these things. I just, see the waters change a bit in the market. So, taking it easy for now and letting the setups come to us. So there's a few things I'm looking at, but I'll let you get into some stuff first. That's kind of just the market outlook, kind of just taking my foot off the gas for the time being.
Yeah.
What do you got for us?
I think I think we have a very similar outlook.
Good.
A lot of the little keywords like even
like little keywords you mentioned in the newsletter or this, I'm sorry, in this chart talk with our newsletters. I feel like they're very much on the same pace of taking the foot of the gas pedal. I think one thing just sector wise, or maybe two things sector wise, we have energy on, cooking. I had that shakeout in, Exxon last week, and you were like, it looks great. And I was like, I'm out of it. I know it's probably going higher, but energy is looking great. Even telecom. I was trading this T-Mobile last week, and this telecom's been in this tight little flag for the last, nearly 2 months now. It's a weekly chart. So we can see this, breakout stage it's been in. And now recently, the last month and a half, 2 months, it's been flagging up here under this, little breakout level. So just keep an eye on some of these less in favor sectors compared to we've been having a big focus on semiconductors, on tech, and just keep an eye on some of these other sectors. Again, healthcare is very strong lately. It's, still retesting these prior all-time highs. Materials, a chip shot away from retesting their all-time highs. Financials, same thing. Few percent, 2-3% away from retesting those 2022 highs. So that was, again, if we think back of 2022, market was amazing, ranked to all-time highs. Then we had this, basically year and a half base, and now we're climbing our way back up. So it's good to see, broad participation across most of the sectors. It's not just like really focused on just say tech and semiconductors. We're seeing broad-based, most of these sectors trying to climb back towards highs, except for, utilities. But that's, almost a good sign, seeing that that's like a flight to safety sector. So again, some strong stuff, but like you mentioned, the short term, we're seeing a little bit of some different price action where we want to be a little bit more patient and waiting for some more A+ setups and just taking anything that kind of comes across the chat. So just while I'm here, I'll go over a couple names to keep an eye on for the week ahead. We got this monster MNST. Again, earnings miss, still gapped up. It's been holding this gap up pretty well under the 60 level. It's blue sky breakout. Again, this has been setting up for about a year and a half now. We're seeing these higher pivot lows that have been formed. Oh, God damn. We're seeing these higher pivot lows forming with each subsequent attempt at that 60 area. So as of late, prior to earnings, 55 was holding. Lately now, this 57 is holding. So you got about $3 risk in this name. Mentioned telecom, flagging out for the last month and a half or so. T-Mobile doing the same thing, just flagging out here. So looking for, we tried this last week. There was 166. It was break-even trade for myself, but I will look to add back up to that 166 in time. We have this Marriott, MAR, and same thing last few weeks, pretty tight consolidation under this 252, for a little bull flag breakout. And last but not least, again, I know you had this for a short, but it's just very tight in here, so it's kind of either
That's so
way.
funny. I switched on it today. Yeah. I was gonna say.
It's like
I have a long list for tomorrow.
yeah. So again, I have a buy stop up through this 1560. I know you mentioned shakedown for a short through 1500. Again, super tight down here. Kind of can go either way. But still a couple names just keep on the radar. So I'll pass this back to you. And if you want to go over, where is this little button? Oh, here we go.
All right. I'm going through a few charts. I'll start with that Melly. I switched on that. I wanted to see how it reacted, and a big moving average guy. It's a very, very simple setup here. The reason I like to the short side before today, just been riding the 8-day simple moving average lower. As this trend to the bottom of the channel, looked like if we had some market weakness, it could push through. Today, kind of a choppy day, so nothing really back and forth. And then this one remains strong at support. So now, it breaks that 1553 area. That looks good for a bounce. Just kind of probably traded towards the gap, the 1675, 1680 area. Don't want to be greedy with it, but yeah, no, I had that on my long list tomorrow going into the day too. A few other things. This FOUR was the trade of the week. Didn't give a difficult entry. We wanted to buy this up through 83, 8260 area. Kind of came down, pivoted off the area, and moved higher. So definitely looks good. Weekly chart looks really nice still. Just didn't give me the entry I really wanted today, and I'm not looking to force things right now. Still riding this HIMS, but losing momentum. This is the type of action we were getting before we saw things slow down, where it's I can buy this opening range breakout and HIMS huge with a very tight stop off the open, and that was working over and over and over again every day for months. We just saw it begin to slow up last week. So I'm taking that as a big signal, but I'll stick with this one until it breaks this and closes below that 14 area. This ASPN just flagging at highs here. Nice little 4-week flag working on its 5th week. Thinking a sustained move through is 18. Definitely looks nice. Like how the volume is drying up as it gets closer to the trigger. Should have a breakout day on high volume, but again, we're not in that breakout environment, or seemingly not. You know, we have CPI tomorrow. Everything can always change in a day. So I'll keep my eye on it. But definitely, if I saw this set up 2 weeks ago, I'll be much more excited about it than I am going tomorrow.
Mhm.
ODD, tech name, software, still flagging, has some work to do. You know, keep it on radar. Do have 48 in time, but again, very wide and loose. Does not look very appealing just yet, but could have some enticing action in the future. ASND, pharmaceutical name, very tight. Again, another thin name though, so tough to trade. Not my favorite trading these thin names, but if it's able to get up through this like 150-ish area, could have a tight entry for an explosive move to the upside. This TDW is an energy name. This triggered today, but didn't really close too far above the level. Like how it on earnings broke this macro level, has since come back and retested this resistance, putting in new support, and now trying to push up higher off it. Watch this 82-ish tomorrow. Could potentially get long some there. I'm keeping my eye on this CRISP too, CRISPR Therapeutics. If you look, it had a huge breakout. Now it's kind of coming to retest this level, this major resistance level, and then all the way down here it has this previous base level. If you look on the weekly chart, huge breakout, huge level above it. But now it's just kind of pulling in. So if we pivot off this area on the weekly chart, this previous resistance area could be a really great support buy for us. But again, we haven't seen that action yet. Have to let it prove itself before we want to jump in. Market change a little bit in front of us, so I'll keep our eyes on that. This Affirm looks okay, looked better coming into day today. Weekly chart looks nice to that 41 area, but not getting a ton of traction. Heavily shorted name that doesn't get a lot of traction is not a good thing. You want these heavily shorted names to rip right away and just kind of punish the shorts, because the longer it stays around this area, the longer the shorts are in control. And still keep it on this SWAV. Was traded a few weeks ago that never triggered. I was looking for a move through this. What was this? 267 was the trigger. So wide name, still just chopping around this earnings range. Nice little channel it's developing. Don't want to be early to this one. Feel no need to rush into anything at this point, but you want to keep the best on your radar. This one's still chopping around, trading around 52-week highs. Strong name, has not given up its earnings lows yet, even though the market's chopping around. So still looks pretty good. Other than that, just research time heavy. Don't need to do too much. While the market's chopping around, has become very difficult these past few weeks. We haven't really done much in the indices, so we'll see. We got CPI tomorrow. That's always a market mover. Number comes in low, we rip. Number comes in high, we sell. Is the basic consensus, but we'll see. And we've got some PPI Thursday data wise, jobless claims, things like that. Friday, information on labor market. And then next Wednesday, we got our next Fed meeting where they give more information about whether they're cutting rates or, how long they're going to prolong that, whatever it may be. So dealing with some choppy times, don't need to do too much. Again, one of the best skills you can acquire is killing it when it's easy and not doing too much when it's difficult. And right now it's very quickly gotten difficult. So that's my spiel. Sticking with it. Anything else you got for him?
I think you nailed it, buddy.
All right. And without that's all we got for you this week. Catch you guys next week. Like, comment, subscribe, all that good stuff. See you guys next week.